And we are live. Hello, hello. Hi there, everyone. Thank you so much for joining the live stream. Oh my gosh. Having a co host on live is so hard. This whole setup is beyond me. Anyways, welcome to the live stream, Samuel. What's
Hello.
good, honey? Talk to me. It is 2025. How are we getting our bag up this year? Tell me. Actually,
Well,
first,
okay, so my name is Samuel, and I'm a professional photographer. I've known Whispering for a while now. It's been a long time coming. On the side, I'm also like an IT project manager. Yeah, so that's what I do. I think as regards investing, I've been investing for not too long, maybe 3, 4 years, 4 years, yeah, thereabouts. But it's been an interesting journey so far. So that's what I do.
nice. Coach, I'm coming to submit my assignment soon. Hurry up, Damilola. Hurry up. All right, nice to meet you, Samuel. Thank you so much for joining the live and sharing your story as well. I know we've always been talking about investing, and I wanted us to come on here because I do live streams a lot to talk about investing and all and answer many burning questions. So tell me, what's your journey and your story on as to how you started investing?
Hmm.
I'm curious to hear from you.
Right. Okay. I think it started back in 2021. Then I didn't know much about it. I just downloaded Wealth Simple, and I think I bought a Tesla stock because then I wasn't hearing much about, Tesla and the like. So I got it, but I think I left it for about 2 years. By the time I saw it, I think it had gone up. So 2023 was when I was like, okay, let me take my time to understand what is going on. And um, I think I bought some ETFs like VSV, which is an S&P 500, but specific to like I think it's better. I mean, compared to VOO, right? We'll talk about that later. So VAV is like S&P 500, but you're investing in Canada. So, like a Canadian ETF. So yeah, I did that. I bought a few other stocks. I would say some of the mistakes I made, which I think is better to call it out early, is just buying anything at all.
Yes.
Is yeah, it's just best to start with maybe one or two ETFs. Then over
I keep
time, when you
saying
understand
this
the
thing to
things.
people like, you don't need to buy all the companies, all the ETFs. You just
Hmm.
need solid ones. That's it.
Yeah.
Because, like,
Hmm.
eventually you end up with many different things and you don't have a strategy. So,
Right.
I don't like that. Anyway, so do you feel like now you have like an investing strategy or a pattern that you use? Because it looks like you started off with, you just landed on it by accident in 2023. You bought
No,
Tesla.
I learned
You're
on it
like, yes,
2021.
my
Then I
money has
started.
doubled. I feel like
Right.
that's the same for
Right.
most people. They just try it out just a little bit, and they're like, "Damn, this thing works. Let me actually now learn more about it and start to grow and build and all of that." So,
Yeah.
what's your strategy now, and how did you learn
Strategy.
it?
Now, okay, so well, I read a lot. On
Oh yeah,
investing,
now
I read
scholar, where do
about
you
about 15 books in the space of 2 years for investing. One of the ones I would recommend, it might sound very funny, but it's um, Stock Investing for Dummies. Very detailed book.
read?
It will break down everything you need to know. The type of equities, your risk, level, you know, how many years you want to invest for, things like that. I think that's very important. So, my strategy, I do dollar cost averaging, which is DCA. I think that's good, especially if maybe you are like a salary earner and like paycheck to paycheck. But you know, it depends. Some people have a chunk of money, right? So if you have that money right now to invest, why not just
I get
go
these
into
questions
it?
a lot about like, oh, if I have big money, should I put all the money at once or should I split it? So what's your own
Well,
strategy for that? Will you
my own
put all
strategy
the
for
money
that.
at once, or would you,
No, I,
if you
I
have the money
won't
at once, let's say you have
at
10K,
once.
would you put it all
Okay.
at once or you put it small, small, 500?
Well, if I have 10K, with what I know now, I can invest maybe 7.5, and I keep 2.5. For sure, I should have my emergency fund because you don't want to just invest all your money. Anything can come up at any time. So definitely, you want to look at your portfolio. Okay, what do you want to invest in? put maybe 50 or 70%.
70%.
Then the
Then the
essence of
essence of
having the
having the
remaining
remaining
25%
25%
is
is
for
for
when
when
market
market
dips.
dips.
For
For
example,
example,
gold just crashed. I mean, gold didn't crash much, maybe like 10%, but silver
silver
crashed
crashed
about
about
20 or
20 or
30%
30%
in the past
in
2
the past
I
2
feel
days.
like silver
days.
has been overhyped already.
Yeah,
Normal.
it
It
is.
is.
It is. It is. So, yeah. So,
So,
like, then
then
also,
also,
with the
with the
way,
way, Trump,
Trump, like different things are going on right now. So there's a little bit of
of
fear in the
fear in the
market.
market.
So it might
So
be
it
a
might
good
be a
time to
good time
come
to
in.
come in.
Considering other things like,
things like,
okay, earnings. So like Q4 2025 earnings are coming out now. For example, Palantir just reported their
Wait,
earnings.
you're saying Q4 2025 earnings. How will everybody know? You need to bring it back to the
Break it
ground
down,
level.
right?
Like
Okay.
what is
I'm being
Q4
so
earning? What is
advanced.
2025?
Okay.
Like calm down. We
So,
know you know everything. You read
no,
investing
I
for
don't know
dummies,
everything.
pali
No,
to pali.
this is not a financial
Simplify it.
advice.
Let's make it
Yeah.
let's make it simple
Okay.
as
So
possible. So like
simple.
I
Okay.
know you talked about
Okay.
many
Go ahead.
things and you're sharing your
Okay.
investing strategy, but also like a lot of people, not everybody that is joining has already started investing. So we're trying to get the
That's
goal is
true.
to help more people understand investing better and actually
Mhm.
start. Right.
Okay.
So even if we're on our own level, we also have to
Right.
bring it down to
Consider,
foundation.
right?
Yeah.
Okay. So I
And someone
think
is also asking in the chat for the
okay, go
stock
ahead. I wanted to
investing
say
for
that.
dummies. Which book did you buy?
Yes.
Which edition did you buy?
I think Eric Tyson, I think edition 6. I can confirm that. Either 6th or 7th edition. I can check. I will
Okay.
check and maybe let you know. Yeah, for sure. And I think there are two types. There's one that is specific to the US, and there's one that is for Canada. The US one will be talking more about US, like I don't know if you've mentioned this to your followers before. Um, New York Stock Exchange is different from TSX, which is Toronto Stock Exchange, right? So it's also good to understand the differences. So I would say that person, if that person is in Canada, they should consider like the Canadian one, because that way they
Gotcha.
will be able to relate. So the likes of maybe TFSA we mentioned, that's tax savings free tax-free saving account, and RRSP, which I believe most Canadians are familiar with. So yeah.
Yeah. Okay. That's good. So like what are some things that you typically look out for when you're picking a stock or an investment?
You said we should come to low level. Okay, I'll try. Okay, first of all, I think
Or an ETF
um
rather.
an ETF. Okay. Okay. So one of the things I'll mention is when I started off, I didn't really understand what diversification means. So a lot of people get it wrong. Diversification is not just having different sectors, but also having, investments in different countries.
Countries.
So what I look out for in ETF, of course, management ratio, right? You want to spend the least amount on, because you don't want to make gain of, okay, let's say I invested 1,000 and I've made maybe 15%, that's $150, right? I don't want to pay 5% or 3%, on that of the gain to the company, right? So you want to consider MER. I think management ratio, or is it expense ratio? I
Management
can't
expense
remember.
ratio. What would you say is like a decent MER for
A
you?
decent one, I would say between zero point 0.1 and maybe, uh, honestly, 0.8 is still okay. Like,
Yeah, I think for me up to
it
0.9
depends.
because most
Yeah,
ETF
0.9
they
is
are up
good.
to 0.9.
Yeah, yeah. So that's good. I will also check um the is it body, or what do I call it? So for example, we have Vanguard, right? We have Vanguard, we have BlackRock, we have iShares. So
Like the
Vanguard
portfolio
has,
manager.
yeah, manager, yeah. Yeah, I think Vanguard has one of the best, if not the lowest, when it
Fees.
comes to MER, and also
I feel like
consider
they do. BlackRock also has good fees. It's just
they do
it's
too.
almost
Yes,
a par with
yes,
Vanguard.
yes. Yeah, so I'll consider that. Then I'll consider the sectors too. So I so the thing is, as the journey progresses, I learn more. I bought some ETFs like 2 years ago, like, so their names might be funny, like maybe XEG, that's energy sector, Canada, XIC, that's healthcare sector. But I found out that like you don't really have to buy you don't always have to buy ETFs by the sector. Just pick maybe one, two or three sectors that you feel like you're familiar with. I'll give you a good example now. Um, I had VFV for almost 2 years before selling my VFV to put more in my XQT. Why? Because VFV is already a part of XQT, right?
Yeah.
Which is about, I think, 45%
So now
US,
you no longer carry
35% Canada.
VFV anymore.
Not right now. Which I mean, I'm not as in it's a very good investment because it's S&P 500, and most people in North America can relate to it. But because I wanted, a little bit of diversification in maybe
Other
European
industry.
countries and Asia, yeah. And so, for example, me now, what I would advise, or maybe I won't say advise, what I would suggest for people who are new, they should have at least maybe 40% of their portfolio in ETF, because you don't want to wake up and see minus 15%. It
And that's very
happens.
possible with stocks. I was talking to my sister today and
Yes.
she was telling me about SanDisk. That SanDisk
Oh,
is
yes,
up
I have SanDisk.
200
It's good.
plus in the last 3 months or something. I'm
Yeah.
like, bro, I like that it's bringing money, but also companies like that could dip in 3 days. Because what do you mean they are up
But
200% in
they,
3 months?
okay, well, SanDisk
200% in three
is
months is
unique.
insane.
Yeah, but they are up 1,700% in the past 1 year.
That's an unusual high.
Okay, we'll talk
That's an
about that
unusual
one.
high. What do you
But it
think?
depends on
Oh,
the
we're having a
companies.
debate. I want to hear
Me,
your
right?
perspective.
Okay, so, okay, I'll tell you what happened. So normally, right, I know SanDisk. I've used them for, I would say, at least 15 years now. I've
You've
been
used the
using
product.
memory
That's what you
card.
say.
Yeah, the product, yes. I mean, you are buying. So anytime you're buying, and I think people should understand this. Anything you want to, any stock you want to buy, the best way to understand, apart from the fundamentals or the technical analysis, go and check the product out. So you don't really have to buy the physical product. It can be going to their website to understand, oh, what did they really do? How do they make money? And things like that. So I've been using SanDisk for a long time, but I didn't even know they had stock and the likes. So I think in December I read some things about their financial, like, these people are doing well. And I use ChatGPT a lot. So I went ChatGPT, okay, with my knowledge of maybe stocks now and like my portfolio, what AI related stock can I buy that can do maybe 100% in the next 1 year? Right? For example, he gave me a list, and I actually mentioned SanDisk and maybe Micron and things like that. So let me just cut it short. What I'm trying to point out is the reason why SanDisk is going up is because most of these AI companies, they are building data centers and they need place to store their memory. And SanDisk, right now, they are oversold. They don't even have enough to
But
sell
I would think
anymore.
they do mostly
Okay.
cloud storage.
No. Physical. So, for example, I bought like a 20 terabytes hard drive last year, about $750, and the stuff was like a machine, and it's so fast. So you can imagine. I mean, 5 years ago, I mean, you might not see something like that. Do you get? And the way Meta and Microsoft, all those people are going all out to build data centers, they definitely need something.
So
But
you now going bringing it
okay,
back to you as a photographer, don't you have
yes,
both? Well, it makes sense because
go
you
ahead.
have both cloud storage and physical
I
storage.
have both. I have both. Yeah, for
So
sure.
that means the cloud storage like AWS and the rest would still perform, and like the
Yes,
physical storage like SanDisk and the like will perform.
yes, yes.
Okay. Because I've
Because
never
the
looked
cloud
into
storage.
SanDisk. It's just today my sister was telling me that they
Oh,
are
you
at the
should
moon
look
right
into
now and
it,
everything. I was like, damn.
but I would say, okay, I'll tell you
It's
what I
already
did,
at
for example.
all-time high. I don't think I want to get in at the high. I would rather buy an ETF and just sit
Well, me, I
there, right?
targeted their earnings. Their earnings came out on Thursday, and I think they beat earnings. And I think pre-market they were up 23%. So let me tell you my own story particularly. So I think I wish I had gone in earlier. Last year, February, they entered, I think S&P 600 small cap, and before November, they do you believe they are now in S&P 500? Do you believe they are?
Wow.
Yes, they joined S&P in November. So that gives me even more confidence. And they are not mid cap anymore. They are mega cap because their market cap is 77 billion. That was as at last week.
What's so that when you're saying all this, you need to bring it down. So what's
Down,
the
okay.
size for small cap,
Small
mid
is
cap, and mega
zero
cap?
to, okay. I think mid is 0 to 2 billion. Then I think 2 billion to, I think 10 billion is no, there's one before mid, which is the small cap. Yeah, small cap 0 to 2 billion. 2 billion to, I think 10 billion is mid cap. Then I think anything above 10 billion to maybe 100 billion is mega cap for people who are learning. Yeah.
So when
So
we say
those
mega
things,
cap, we
okay.
mean the number of shares and the market price. So it's like
Yes,
the number of
yes,
shares that they are currently selling and the share price. So that's the meaning of market cap. And that's like one of the things you look out for when you're buying a company. But then if you're
yes,
searching it online, maybe you're using like Yahoo Finance or Morningstar, anywhere you're doing your research, they would list it there directly that if it's mid cap, if it's small cap, if it's mega, and you would know exactly what range that company is when you're doing your
yes.
research.
Which is very important because for new investors, I would advise not to really consider small cap because they are very speculative. I'll give you a good example of myself. So 2 years ago, someone told me about a stock called LUNR. That's Luna. It's called Intuitive Machines. I bought it, and that's one of the things you guys should be careful of. I bought it, and trust me, for over a year, I was down minus 48%. And I was begging God, God, please,
God, I
when will this thing
beg, where my
stay?
money go come back.
Here you get. So, luckily for me, I think in October, it started coming up a little bit. Then I think I was in negative, maybe 15%. And by January, they went up 90% because I was still DCA, like I was still dollar cost averaging. So, as the time I got to plus 57%, yeah, I sold it all. That was the money I used to buy SanDisk. So even if SanDisk do anyhow, I'm still so you need to balance like your risk tolerance
Level.
to know what you can really do. And to think about it, most of these stocks I'm mentioning are just like 3 or 4%. So even if they go down 20%, it might affect my portfolio, but not really because
Not
my
so much
core is still like ETF and they are strong.
ETFs. So what are, when do you actually sell? How did you know it was time for you to sell that at 15%?
Yes. No, 57%. So okay, so okay, I'll follow this guy's quote, Warren Buffett. I like him a lot, right? He's kind of a conservative investor, but he's someone and people should actually listen to a lot. If he said if you cannot hold a company for at least 10 years, you should not buy it. So if I had the knowledge I have now when I bought that stock, I won't buy it. Why? Because not because it's bad, but because I don't know much about it. Right. So if you don't know much about it, even okay, I'll give an example. For someone like me, I spend time at least 10, 15 minutes every day, which I don't advise to just look at okay, what's going on in the market. Though this doesn't affect my sentiment. A good example is today. Robinhood is down 10%. I won't sell it regardless, right? But it's good to just go in and out to see.
I
So
think
what I
I
would
only
say
always
is
advise people that understand how markets move to check it.
to
If you
check.
don't understand, you just
Understand?
close your
You
app.
run mad.
Because if you are looking at it every day, your money go just dey go up, they go down, you go say, I
Up
don't dey
and
do again,
down.
no, all my
Yes,
money
yes,
care.
yes. So what I would say is like it's good to spend time to understand what you want to buy and don't we should review, I'll say at least or at not at least, I'll say on a quarterly basis good or biannually. Like if you want to sell, right? For example, let's say you've made money, you want to sell. Most times experts, investors say it's better to trim. If you see, okay, it's going up too much and it's too green, you can just take maybe 20 or 30% and maybe put it in an ETF. That way, you are solidifying your gain because something that goes up 200% in 6 months can be down 90% in 2 months. So why not take maybe 40% of that profit, put it on ETF that you know that okay, even if it was a market crash, you're not going to lose all your money. So I'll say that's my strategy. Selling, it's not really a good as an advice because in a way, sometimes people. I'll give you a good example. what's the name of this guy? The owner or like the founder or like the president of SoftBank invested in. He had about 4 billion, I think, in what's called this Nvidia about maybe 2020 or so. So last year he was now doing like a program and he went to meet what's the name of this guy? What's the name of this guy? The Nvidia guy. That this guy sold
CEO.
his the CEO. Thank you very much. Yeah, this guy sold his investments in 2020, but if he had left it would have been 78 billion. So you can imagine. So even the big boys make mistake. So most times, if the fundamentals of your ETF, I mean not ETF, ETF is the same, right? Your stock has not changed. I think it's better to just leave it, right? Until you get to a level whereby, for example, a good example, sorry, I know you might have a question. A good example is maybe Coca-Cola. You don't expect Coca-Cola to give you double your money in 5 years. I mean, it can, but Coca-Cola is already mega
It's
cap.
already mega. It's just
It's
like Costco.
exactly,
Costco shares is
exactly,
already in almost 1,000 plus. How do you
exactly.
expect it to enter
So,
2,000?
so things like that, yeah, matters.
Someone was talking about like how do you know the good Canadian ETFs to buy or American, Canadian or American? No, wait. The
Okay, to
question.
buy.
Let me start from the first question.
Okay, start from the
So,
first
is
one.
it better to buy? Which one is better to buy as a beginner, Canadian or American? Then examples. I'll first take the first question, and you can take
Go
the
ahead.
second question. The
Go ahead.
first question about which is better to buy. I don't think we should be looking at it in terms of which is better to buy. I think we should be looking at it in terms of global market representation. So
Yeah, that's
Canadian
right.
stock market only represents about 3% of the global stock market, whereas American stock markets represent about 65%. So I think it's logical for you to invest more in American companies than Canadian companies because they have more market representation. However, you can also buy the CDRs, which is like hedged version of
Hedged.
US
That's right.
stocks in
Mm-hmm.
Canadian dollars. So it's not Canadian companies, but it's listed in TSX, Toronto Stock Exchange, or it's available in Canadian dollars. Now, the second question to you, what are some examples that based on your experience that you could feel like people could research? Because over here we don't give you advice, we teach you what to do so you
Advice.
can do your
Right.
research.
Yes. Okay, Canadian ETF. Honestly, like I would say the safest, right? The safest is still maybe VFV, which I believe you know already. VFV is the S&P 500, but in Canadian dollars. And that way you are exposed to the top 500 companies in the
So do you
US.
do VFV or do you do VOO? So VFV is Canadian
Exactly.
dollars,
Good
VOO
question.
is USD. Somebody is
Good
asking that
question.
on Instagram that can you invest in both VFV and VOO? So
You,
since you're already on that topic,
yes.
talk
Okay.
about.
And these are the things that I actually learned the hard way. When I started, I bought VAV and VO. And I'm sure someone who knows investment like, what's the mean? You are buying the same thing in two places.
Literally
So,
what I
but
just
the
typed in the
difference,
chat.
yeah, so it's like you buying the same thing in two places. However, the difference is the conversion. So, like maybe, depends on like the dollar to Canadian dollar rates. I mean, US dollar to Canadian dollar rates on that day. So that way, if you see VO might be maybe 0.5% right now and CVFV at 0.7, doesn't mean they are different, right? It's just the conversion. So if you're in
Fees and the
Canada,
exchange rates as well.
yes. If you're in Canada, I would say VFV makes more sense. If you're in the US, maybe VO. But some people still say they prefer their money to be in US dollars.
I am
So
one of
it's
those
left to
people.
you. So,
I'm one of those people who prefer my investment to be, but my perspective is this. I also earn in US dollars.
okay.
So because of that, I am not
Oh, that
going
makes
through that
sense.
exchange fees and that whole rugby of people that are buying and
Right.
can like having to exchange the dollars. So if I have Canadian dollars, I'll buy VFE.
Mm-hmm.
But if I'm investing in my USD, I just buy VOO or any USD investment.
Makes
So
sense.
that
That
could be the
makes
same
sense.
for any other person. But if I were to choose, let's say I had like the chance, I'll buy based on the currency that I have. But in the long run, I'm pro US dollar investment because Canadian dollars is
Makes
shit.
sense.
So there are still some investment that I don't mind converting it in Canadian dollars to USD. For example, whenever I buy Nvidia, it's USD.
Okay.
I have to do that
Oh
USD
yeah, I
exchange.
have to do that
Whenever
in
I know
USD.
there's the CDR, the Canadian dollar version, but there are some
But you
companies that
already
I'll just
have,
rather buy it in USD because I know
yes.
that I just don't have that. confidence in Canadian
Yes,
dollars.
I
But I
agree.
always typically teach people to just buy the Canadian dollar version until you understand it more, or maybe when you're now putting more money, your portfolio
Mm-hmm.
is growing, then those things will now start to
Yes.
matter. But in the beginning, honestly, it doesn't matter. At least just start first. Then later on, as you understand the market more, you'd know what to do. Someone else is
That's
also
a
asking
question. Okay.
XEQT or VEQT.
That's an advanced question. Well, me
They're pretty much
personally,
similar as well, but
yes, they are similar. Me personally, I haven't tried VQT. I would pick XQT just because I understand it. They are very similar, actually. In fact, there's FEQT, which
there's
I
many
bought.
EQTs because
There's
they're
even
all
ZEQT.
yes, because they're all one equity portfolio. So
Yes.
the most important thing is if you pick one, stick with it. They typically carry the same kind of company. Don't try to buy all of them because they typically
Mm-hmm.
carry the same amount of things, and they always
Yes.
carry more than 2,000 plus companies. So you don't have to buy all
Yeah,
of
a
them.
lot of
Instead,
them.
buy one of them. And I
Mm-hmm.
think what the difference is, one prioritizes a specific industry
Mm-hmm.
more than the other.
Sorry.
And that's what I've noticed with the XQT and VQT as well. And some of them, I think one of them is in another in USD. Somebody else is asking on you on TikTok, how much should I
Okay.
use for a good start?
Ah,
This one is
good
simple. I always
question.
talk about this all the time, but I'll let you take it.
Okay. I'll just pick percentage. Most times, I would say for a new investor, maybe 5 to 10% of what you earn is okay. It's always best to start small. It can be as low as $50. I mean, I'm not saying $50 is 10% of what you earn, but like $50, $100 doesn't matter, right? Just start small. Spend time in the market to understand, right? Before putting a lot of money, because even based on expert advice, investing money is not money you want to use in 3 months' time or next year. You're supposed to leave it there and let it grow. So you can answer.
Yeah, it's pretty much the same thing that I would say because you can start with any amount. I think what I always recommend is think about like any amount that you feel like you can actually like you will spend without reason. For most people, it's around $50. Like you spend without reason. So start with $50. You can do $50 a month. The most important thing that I would say is don't just do that $50 and just like, okay, that's it. Start with that $50 and try to see if you can automate it or make it recurring and continue to improve from there. Then that's it. But then when it comes to investing, you can actually start with $1. You can start with $2. You can start with $5. You don't need to have all the money for you to get going. Someone is asking, are you still holding HHIS? I still hold it. It's one of my highest
Oh, you
dividend
right?
paying
Okay,
ETF.
nice.
Yeah, it's still one of
Well,
my highest dividend paying ETF, and I just hold it just because it gives me consistent dividend. Anyway, this was fun. I don't see any more questions in the chat. Smoke Lord is saying consistency is what all that matters, and not really how much you start with. Exactly. Word. Preach, preach. Samuel, do you have any final words for the audience?
sorry, I just have a little bit of background noise. Well, I would say, I think my final word is you don't need to wait to invest. Like you don't need to wait. The earlier, the better. And based on my recent analysis, like big investing is becoming more automated. So trust me, in the future, more people are coming to the market.
So the earlier you
Unlike
are in, the
20,
better.
yeah, 20 years ago, people have to, go to the stock market, like the actual store to do, they
To
check
buy.
newspaper after, the week, okay, how much, things like that. So, but now people can buy with a twinkle of an eye. And that's
And
why most companies are actually, growing, you see 10% today, 5% tomorrow, and things like that. So I would say the earlier the better. And just start simple, to be honest. Start simple. And you don't even have to like you can even, invest for as much as maybe 3, 6 months. Keep understanding the markets. I mean, you can't really master the market, and that's why even like expert investors or people who have been investing for 70, 80 years will tell you that you can't beat the market.
yep.
So with all the sandisk we're talking about, it's in a way it's kind of rough playing. So what I'm
Speculation. Yeah, it's still a lot of
yes, yeah,
speculation.
yes. The I think the bottom line is just have more greens than red. That's the summary. Make sure your money is better than what's it called? Is it inflation? Right?
You
So
beat
once you can
inflation, yeah.
do beat inflation, if you can do 10%, 12% a year, I think is okay. And a good, even VAV, they said, okay, averagely 9 to 10%. But good years, they make 23%. And
Last
that
year was
is,
like almost 19%.
yes. So you can imagine, right? So, yeah, that's
So
small.
basically,
And
that means you don't need to chase all the ETFs or all the companies. Just buy
honestly, don't
VFD, you
stress
have 90%,
yourself.
and you go from
Exactly.
there. All right, this was
Right.
fun. Thank you
Yeah,
so much
it
for
was fun.
joining on the
Yeah,
live
thank you.
stream.
That's great.
We'll probably do this again. And
Sure.
yeah, thank you all for joining the live. I hope you had fun and you enjoyed it.
Thank you,
We
guys.
probably missed some question, but we wanted to just wrap it up and just jump in real quick to chat. We'll talk to you all
Okay.
soon. Take care. Have a
All
good
right.
one.
Thank
Bye.
you so much. Yeah. Bye.